time for another stock review. This time we are talking Hawaiian Electric, ticker symbol HE. That's easy, isn't it? Hawaiian Electric. This was requested by one of our members. If you are a member of our channel and you do a super chat, I can do a review for you. And in this review, please note, I am not sponsored by anyone from the company. I do not own the stock. I only own the S&P 500. I'm here just to present the facts to you so you can make an informed decision on whether the stock is right for you. During this review, you might like to tap the like button and consider subscribing, because I'm going to share with you all of the following. I'm going to share with you the basic news here. We're going to open it up and look deep into who's buying on the inside, who's selling on the inside. We're also going to look at the intrinsic valuation. We're going to look at the balance sheet, the profit, the loss, the inside trading, what their margins are like. We're going to take a look at the website as well, so we can learn a bit more about the company. We're also going to compare it to the S&P 500, looking at the dividend payouts, a full back test. The stock, we're going to provide you with the buy zone, sell zone, support level, so you can trade it as well. We're going to give you analysis from Seeking Alpha. If you want my referral, it's the only way you get $25 off and the only way you get a free trial. My referral is in the chat right now. I'm making this live. It'll also be available below in the description and pinned to the comments when I finish this video. We've got some news around the stock as well. Breaking news. Also, we're going to cover the earnings. All of that is coming up in this review. So without further ado, let's get to it. This also accompanies the Meet the CEO series as well. You might like the CEO of this company to be on the show, and I'll explain to you how that works as we go on through the review. So if you like that, please do consider subscribing and tapping the like button. It does help. And there will be a full playlist as well to this. And if you do want follow-ups, if you do want news, you can do that as a member. You can ask me to do latest news on the stock and continue following it. If you want me to cover the earnings, you can also get me to do the earnings. It's a membership perk, $5 super chat, and I'll cover the earnings. All right, okay, so let's get straight into it. What is Hawaiian Electric? First of all, let's look at the basic line chart. You can see how it's trading. It's quite volatile, but it's trending up until this happened. In the 31st of July 2023, I think. Isn't that where we had the fire in Hawaii? Isn't that there? July 23. Sounds about right. The stock crashed down and now it's starting again. Well, maybe we'll look at that. Anyway. Hawaiian Electric Industries, that's probably why Robbie Cooper asked me to cover it, because it's gone down. Is it a good time to buy it back? Well, let's have a look at it. Hawaiian Electric Industries is a holding company which engages in power, financial, and renewable and sustainable infrastructure investment businesses. It operates through the following segments: electric utility, bank, and other. The electric utility segment offers essential electric services on the islands of Oahu, I pronounced this wrong, I'm sure, Maui, Lanai, and Molokai. I hope I've pronounced that correct. The bank segment delivers banking and other financial services to Hawaiian consumers and businesses. The other segment consists of corporate level operating, general and administrative expenses. The company was founded by C. Dudley Pratt Jr. in 1981 and is headquartered in Honolulu, Hawaii. The listed name for HE is Hawaiian Electric Industries. Founded in 1981, Honolulu, Hawaii. 3,706 employees, and Scott W.H. Sue is the CEO. So if you'd like to invite Scott onto the show, you simply go to Investor Relations, find their email on the website, email them and ask them if they'd like to be on the show. We do have a Meet the CEO series where we talk to CEOs, and it's an unscripted event. It's just to get to know the CEO. If you'd like to do that, just build up a relationship with them, tell them that you're an investor, and we do have this series on the show. When you've got them interested, then you can pass them over to me, but build a relationship with them first. That's the best way of doing it. If you're buying this with margin, it's 45% maintenance requirement. So it's the second lowest you can get. 25% is the lowest. That's the S&P 500. But nothing is risk-free. But nevertheless, 45% is relatively low risk if you're using margin. Very low volume, 2.63. Today's volume is 2.9. So it's above average slightly today, but not a lot of volume with this stock, which means you can be held in the stock if you're trying to trade it. It means the stock price could drop because no one's prepared to pay what you want to sell it for. A dividend yield, 3.11. That looks very attractive. We'll see, though, because if the dividend yield isn't paying out regularly and it's not increasing, then it's not much point, is it? We'll cover that in a moment. Price to earnings ratio, -1. So it could be a good value. Let's have a look. We'll find out shortly. 52-week high, 1812. 52-week low, 761. Had a little bit of a drop recently. Okay. Scrolling on down, we'll look at inside trading here. The best way to show you, though, is do it like this. If you've just tuned into our live show, we are covering the charge point earnings. We're just not there just yet. We're just waiting before the event to start, so we're making a review at the moment. Okay, scrolling on down, what we are interested in particularly is insiders. Insiders have been buying more than they've been selling, and a very small trim off recently. If we have a little look, so there's not going to be much to learn from here. No real action, no insiders buying much, but let's have a look. Uninformative sell. That's just trimming off, natural trimming off, nothing there. Uninformative basically means there are automated sales set up just for tax purposes. It's perfectly normal. It's not sentiment. It's not like the company's rubbish, we're selling it all. That's a completely different thing. Jerry and Elba, welcome to you. I'll come to you at the end of this. I'm just making a video, so stand by. I want to answer all your questions. So uninformative buys, sales, not a lot going on. A bit of uninformative buys as well, but very, very small positions. Not a lot to shout about. So no major inside trading going on here at all. Nothing to worry about. This is what Morningstar say. I don't take their word for anything because at the end of the day, they're paid to report this. But they're saying it's there's no economic moat at all. That means their profits are very minimal. That means they can be in financial difficulty very, very easily. Fair value is 9, and the price today is 12. So they're saying it's undervalued at the moment. Overvalued, I beg your pardon. They're saying it's overvalued, it's too expensive. But I will look at that in a moment and I'll come to my conclusions. Uncertainty, extreme, and stewardship, standard. What about the earnings? Well, that's a bit all over the place, isn't it, really? Back in 23, huge beat. Then we had a miss. Then we had a miss. Then we had a miss. Now expectations set for November the 7th. Much, much higher. Things might be turning around. This could be an opportunity for this company. That's a really high expectation. And of course, if it beats that, then things could be going back up again. But we'll cover all of that as we go through the review. Who else is buying the stock? Walgreens, okay, Medical Therapies Trust, Verizon, AT&T, some old school stuff here, some standard stuff. SoFi, not so good. VF, I'm not familiar with Solventum. Easy Energy. Energy Transfer, Realty Income, that's good. ChargePoint, we're covering that tonight. Very high risk stock. Dollar General, Ford, Pfizer. So it's like old school, solid companies, but they're not all making money. I mean, Ford, I wouldn't buy Ford if it's the last stock in the world. Rivian, that's losing money. So no scam stocks here, but not really that high quality either. And that's important to note because that gives us an indication of how the stock will trade. It tells us the sort of sentiment of the stock. All right. Okay. Anyway, let's move on now. And before we go to the big numbers, just going to ask you and invite you now to tap the like button and consider subscribing. We do have the ChargePoint earnings coming up very shortly, live on the show. We're just doing an earnings taking us up to the earnings. We're just doing a review, taking us up to the earnings. Now, first of all, let's have a look at that dividend, all right? Now, a dividend is no good if you're getting paid a dividend, but the stock keeps going down. So in other words, growth is going down. A dividend's not going to, I don't care how good it is. If the stock just keeps going down and down, you're just paying for it with the value of your stock. What you want is either a sideways action growth that just keeps paying you a dividend if you're looking for a passive income. But passive income is only really relevant if you're at retirement age. You don't really, I know Fight Channel loves his passive income, but for me, I want growth until I need the money. Let the money sit in the stock. I don't need dividend payouts. So for me, it's all about the growth. If you can get growth and dividends, that's great. But anyway, let's look at it. We'll go back to 2012, 31 cents. Now, what we want to see is payout every quarter. You can see it's every quarter. We want to see payouts regularly and increasing. We don't want to miss. Be interesting to see when we get to the 23. Wasn't that when they had the big fire in Hawaii? That's when the stock dropped off, I think. Let's have a look. 31, 31, 31, 31, 31, 31, 31. A bit like a horse race, right? A bit like an auction. 31, 31, 31, 31, 31, 31, 32, 32, 32, 32, 33, 33, 34, 34, 35, 36, 36, 36. Very, very nice indeed. Paid out all the way through until September 23. Then it stopped. So that's probably, I would assume, to do with the fires and all the rest of it in Hawaii. So everything was going great. They were paying consistently. Let's have a look, right back from 2012, paying every quarter, increasing every quarter. Great. So 11 years of payouts and increasing and growth. The company was doing well, then stopped. So, is it a good time to buy? Is it going to come back? Just because a company was great, just because there was a disaster beyond their control, doesn't mean the company is going to come back and be great again. However, a power like this, you're going to need power again. The situation hasn't gone away, but someone else could come over and compete and take over. Who knows? Anyway, we'll have a look at this in a moment. So the dividend was great until that incident there. What about back test to the S&P? Well, if you put in 2015 $10,000, you end up with $4,000, where $10,000 would have returned you a 3x in the S&P, 32. But let's see when it fell off. There you go. It was following the S&P pretty much, slightly below, but kind of tracking the S&P, so you could live with that. That's reinvesting the dividends, in case you're wondering, on the S&P and Hawaiian Electric. So it was about performing the same. But then in 2020, in COVID, it fell away. Whereas the S&P did fall away, but then recovered. So obviously, it didn't recover after COVID. So that now tells us the stock is not a COVID play. I don't like COVID plays when they bounce like, Peloton or whatever, and then fall away, or Zoom, whatever. We don't want to see that. It fell away and never really recovered. The S&P started to go up again, and Hawaiian did for a while, but then sideways. It may have recovered slightly, but it's fallen below the S&P now. It's never really recovered, and that's not a good sign. That's not a good sign. It didn't, which shows you COVID affected the business. Whether it was management issues, whatever it was, it never really picked up the way it was before COVID. That's a red flag to me. Then we've got the stock sort of a little rally here, then falling away a little bit. But it's well below the S&P. And then we had the fire, and I'm only assuming that's what it was. I don't know. It just looks so obvious to me because it was the same sort of date. And then boom, down, and it hasn't again recovered there. So it's had a really tough time. It didn't like COVID. It didn't like the fire, obviously, if that's what it was. So it's not looking good. It's not looking like it's good now, but we need to cover we'll come to the numbers in a moment, and then we'll know more about it. So anyway, if you are just tuning in, we are covering the earnings for ChargePoint shortly. We're just doing a review before that of Hawaiian Electric. Please tap the like button, consider subscribing. We're making a video which will go out later. So welcome to the show if you are watching us live now. All right, let's cover the next part of the story. Now, if you want the buy zone, sell zone support levels, we can provide that for our members. Once you've watched this video live now or when it's got published later on, you might like to join Sensei on Sunday, who will show you all the buy zone, sell zone support levels here. So you can trade the stock. He takes care of all the technical stuff every Sunday, 3 p.m. Central Time on this channel. If you are a member and our Sensei, he'll do you a chart completely free of charge. It's what we do for our members. Very, very nice indeed. All right, so that's how you get that. Let's move on with some news, some ratings first of all. Seeking Alpha Analyst. Remember, I'm a Seeking Alpha Analyst. Doesn't make you right, doesn't make you God. It just means you've got an opinion and you broadcast it. That's all. Doesn't mean you're a financial advisor. Even financial advisors who've trained get it wrong all the time. So just bear that in mind. Saying a hold from Seeking Alpha, but also a hold from Wall Street as well. They're saying a hold at this level, not selling it. Quant, however, the AI version, is saying sell, even where it is now. Valuation, A-, down from A+. So it's dropped a bit, but still a good valuation. Growth, D-, not growing at all, but it hasn't got any worse. Profitability, F. It was C+, that's dropped off. Momentum, F, D- has moved up slightly, and revisions, D+ from D. So a slight improvement there, but nothing really jumping out saying buy me. It's just kind of a hold if you're in it, wait and see, but nothing yet to draw me in. I've got to be honest. What about the latest news? This was only out 2 days ago. Judge agrees to move wildfire settlement questions, there we go, to Hawaii Supreme Court. So obviously it was relevant to this fire. Anyway, so we're now going through all the issues with the fire. How long will this go on for? I don't know. Is it an opportunity? I don't know. We haven't got to the numbers yet. A Maui judge ruled on Friday to allow Hawaiian Supreme Court to decide over a question that is holding up the $4 billion wildfire settlement that was first reached a little over a month ago. Judge Peter Cahill on Maui agreed to ask the state Supreme Court questions about how insurance companies can be recouped for money already paid to policyholders, according to media reports on Friday, including the Associated Press. So I'm assuming that Hawaiian Electric probably had its payout, and this is about getting the money for the insurance company, so may not actually affect Hawaiian Electric from what I'm reading here. Last month, Cahill approved a $4 billion settlement with Hawaiian Electric. There you go. Last month, Cahill approved a $5 billion settlement with Hawaiian Electric. So that's just happened. So, that could be very helpful to Hawaiian Electric and 6 other defendants that would resolve lawsuits from hundreds of victims in the Maui wildfires last year. Hawaiian Electric will pay about $2 billion of the settlement, the utility said last month. Okay, this is Hawaiian Electric paying out money. Okay, but their insurance has covered it. Okay, so I guess this is them paying out to their customers, lack of power, yada, 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 all the rest of it. The issue for the Hawaiian Supreme Court is that the insurance companies have already paid out more than $2 billion and want to bring separate legal actions against defendants to recoup the claims. Cahill ruled earlier this month that insurance companies that can't bring their own legal actions, known as subrogation lawsuits. Last month, Wells Fargo upgraded Hawaiian Electric to equal weight from underweight, writing that there's a high probability that a wildfire settlement moves forward in the coming weeks. Okay, that's good news. The Wells Fargo analyst wrote that the insurers may be willing to settle for $1 billion to $1.2 billion, or 30 to 35% of $3.3 billion estimated insured claims, compared to $600 million reportedly offered initially. Okay. All right, so a mixed bag there. Let's read our next bit of news. Hawaiian Electric raised at Wells Fargo with wildfire settlement likely moving forward. So that's what we just spoke to. It looks like Wells Fargo Hawaiian Electric raised at Wells Fargo So they're raising their sentiment. We don't need to read any more of that. What about their earnings? This is August 9th, just gone. They missed 44 was what it was, and it was a miss by 0.05. Gap down $11.74, miss by $12.23. That's the EPS. So quite a miss there. I think we shared that a few moments ago, didn't we? On the yes, we did. We shared with you that the miss was quite significant, but now we're getting a much better estimate. Is this an opportunity? Well, obviously things are moving forward with the legal side of things. The earnings expectation is greatly improved, more than it's been over a year. But let's get through to the business side of things and see how much money they've got, and then perhaps we can decide whether it's a business to invest in or not. All right? Okay. Let's have a quick look at the website. I think this tells you a bit about the business. Nothing too much really we really want to talk about. But this is their mission statement. Together we build a better Hawaii. Inspired by an enlightened king more than a century ago, Hawaii was an early adopter of electricity to light homes and power industry. The ingenuity in creating and delivering power on these isolated islands is a unique story of innovation, connectivity, and progressive thinking that continues today. Hawaiian Electric serves 95% of Hawaii's 1.4 million residents on the islands of Oahu. Sorry if I pronounced that correctly. Maui, Hawaii, Lanai, and Molokai. Established in 1891. So it's the leader, obviously. It's the dominant force there. Hawaiian Electric is committed to empowering its customers and communities by providing affordable, reliable, clean, and sustainable energy. All right, great. Let's now go and look at the business. Let's see how it's faring. All right, let's see if it can survive this. So if you like this content, please do consider tapping the like button and subscribing to the channel. We are in the middle of a live stream. We are covering the earnings in a moment for ChargePoint. We're just doing a review live for one of our members that requested it. All right, so let's get straight into it. Now we're going to look at the value. Right now it's $12.09. Is it undervalued? Well, let's have a look. Morningstar are suggesting that the fair value, if we scroll down here, is $9. Fair value is $9. So they're saying it's overvalued at the moment. It's too expensive. All right. Well, let's see what we have here. I don't take their valuations at all. They're just paid to say all kinds of stuff, and I don't really find it much use. All right. So intrinsic valuation, which is reliable, nothing wrong with this. We've got no warnings today on this one. It's worth $47.62. Undervalued that thereby by 75%. Best case scenario, 81%. Worst case scenario, 69%. Well, this court case gets finished. Things could move up. Of course, their earnings expected to, massively improve. So maybe this is a good time to buy the stock. But let's go down. How well funded is this business? Let's have a look. Scrolling on down. Let's have a look. Okay, here we go. The last reported earnings was in June 29th. Okay, great. July, August, September, and then we get the next earnings in October, November. So our last earnings was flat from the previous earnings. It has been coming down, but now we're expecting things to improve. So earnings going up, litigation getting resolved. This doesn't have a S-curve. This isn't a new business. It's an established business. It's just getting back to business as usual. If the stock price is undervalued, though, maybe it's worth doing it. The revenue has kind of been all around about the same, really, as you'd expect. Really, on the islands of Hawaii, I would imagine revenue would be about the same. Everybody's using your services. It's kind of It's not really a growth company, is it? It's just a stable company that just goes sideways. But that's okay. That's why you get paid a dividend, right? And we've seen the dividend payout consistently until we had the fire. And then obviously everything dropped and the share price dropped and all the rest of it. But back to normal again, slightly higher than before. So if we go back and look at the historic share price, it's been going up, paying a dividend all the time until the fire, and now down, would indicate the business is fine. Once we get past this could be a good buy. Looking at the revenue, it kind of makes sense. It's actually going up, expected. Operating income, well, there you go. Look at that. It was doing business as usual, and then boom, there's the fire. However, now we are going back up, September 24 estimate. This is our income. This is what we're expecting. Things to improve, dramatically improve, and then off we go in December. So if that's the case, it's a buy, isn't it? Because it's just down because of this. Makes sense. Net income, boom, 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 and then down, but then straight back up to where we were again. This looks like a buy to me. This looks like a buy. It really, really does look like an opportunity to buy this. Financing cash flow is up 0.8%. Investing cash flow, we don't have a number. Operating cash flow down 25%, but now we're expecting for that to increase. This looks like a buy to me if we've got money in the bank. Let's have a look. Let's see how well funded the business is. 17.1 billion in assets, 15.9 billion in liabilities. That's a bit tight between assets and liabilities. They're not asset rich, are they? Cash, 550 million. Not much cash, but we don't want cash sitting around. But we don't want too much debt either. Let's have a look at the debt side of things. Bearing in mind, 550 million. If you just tuned in, we've got the charge point earnings coming up in a few minutes. 550 million on cash, 15.9 billion short-term debt. Long-term debt, 3 billion. The short-term debt and long-term, they can pay off their short-term debt, so that's okay. Their long-term debt, they can't touch the sides of that. But things are going to increase and improve. 3.3 billion long-term debt, short-term, 20%. 20%. That's all of their liabilities. So, not too bad a story, considering what we've been through. This could be an opportunity. The earnings is expected to be a lot better. Litigation is getting solved. Looks like we've got some news this month. This could be an opportunity to buy. Balance sheet isn't brilliant, but it wouldn't be, would it? But it's not out of it. Obviously, margins fell off. They were doing good margins, 15%. They were solid, and this is what you're going to get from a company like this. You're not getting tech numbers. You're not getting software numbers. This is great. And then, boom. That's all going to return, though. Operating margin, boom. Net margin, boom. I think this is a buy. It's simply been affected by the fire. It's all getting sorted. It's the dominant force in Hawaii. There's nobody else, I would imagine, going to take the business away from them. They are serving what we saw 98% of customers. I think this is an opportunity to buy. I really do. All right. Profitability score, obviously, recently 39, but that isn't that bad considering where it could be. Profitability could be down to like 9. I've seen that in certain situations. That's going to dramatically go back up again. And solvency, 18%. There you go. It's got a lot of debt, but I think that's going to turn around. So Warren Buffett would be looking to buy a business that's in trouble, but not one that's desperate. Solvency score, that's not good. This company could go bankrupt, but let's consider this. It's a temporary situation. Things are about to get better. No one's going to replace them. They've got the customers. They've got the business. They're not going anywhere. They're fundamentally sorted. If we look at the If we look at the where was it, the balance sheet, the debt position, they can pay off their short-term debt. Their long-term debt is about to get a lot cheaper with rates coming down. That's going to help. Plus income is about to go up. So it's tight for them at the moment, but that's why the stock price is down. And if we look at it, let's go over the last year. It was, how low was it down here? It was as low as 857. It's now 12. It did pop up. It did pop up there on the news of the litigation. It sold off again, but it's going back up again, starting to go again. So it's kind of at its bottom. It could go lower, of course, but look, when you think about it, it's bouncing off its bottoms. I'm just sort of simplifying this for a moment. I'm not doing a chart. Sensei will do that. But I think that from its standing in Hawaii, it's probably going to be okay. And let's look at what Wall Street think. There you go, see? Wall Street agree with me. 17% worst case scenario, 27% average, 39% best. Wall Street agree with me. And honestly, I didn't see that before I got there. But I agree, 100%. This is an opportunity, definitely. Definitely. Now, what about short interest? 24% short. 24% short. So that is very much in a short squeeze territory. And we do have good news now. This could short squeeze. We get that litigation sorted out. And we get a good earnings, which we're anticipating. Remember, that's the company are saying, not Wall Street. The company are expecting to do a lot better on earnings. So remember, that's how these things are done. And if they do that and they do well, there could be a short squeeze here, because that would be great news. Come at the same time as the litigation gets sorted out. With all the short interest, it's already been driven down. We could end up with a short squeeze. We could end up with a short squeeze on this, which would be very nice, wouldn't it? So there you go. No buying, selling from the insiders. That's kind of good. Nothing to report. 1 year ago, that's irrelevant. So we can talk about a year ago, but that's not really relevant. So let's wrap this up. This was for Robbie Cooper. Hawaiian Electric. It's the dominant force on Hawaii. I don't see any evidence of a new company coming in and taking over. It's very difficult to do when you've got an infrastructure already set out. They've been around for a very long time. They're going to still be there because you would need the power, obviously. It's not something you can easily replace. Got a lot of short interest. We're already down. We could get a short squeeze very, very easily. We got litigation coming to a conclusion. We've got estimates of earnings dramatically increasing. So interest rates coming down. It's risky, but then the rewards are high. Wall Street agree with me. They see huge potential here. I would say it's a very considered buy, most certainly. So there's my opinion and my thoughts on Hawaiian Electric. It's very much a considered buy. Click above my head for all the links. If you like alpha spread, seeking alpha, all of those links will be above. If you go into the comments, the description, and look for the more button at the bottom, it also opens up the links above my head if you can't find them. I've also posted the links in the chat for people watching live right now for seeking alpha and alpha spread to get all those discounts and referrals if you want it. You get the best deal with my referrals, otherwise I wouldn't share it. And I'll also post pinned to the comments as well, those links. So look below the comments, it'll be pinned to the top. Here, I shall put my full alpha spread playlist. And down here, very important, I'll put the playlist for Hawaiian Electric. And then if you join Sensei on Sunday, and if I'll remember, he will do a chart for you. If you ask him, find the buy zone, sell zone support levels. I will then put that video, if he makes a video for me, in here in the playlist. So you'll have everything that you need from a fundamental and a chart position to be able to make money. So I wish everybody the very best. But this is a considered buy to me. Until next time, as always, take care of yourselves and each other.